In this video, we will talk about Bionano Genomics. Before the video begins, if you like my content, please consider to like, comment and subscribe to my channel for more. Bionano Genomics recently recovered some of its previous losses, going from $3 to almost $4 by early September, before pulling back to around $3.30. The price actions of the company suggests that the market does believe that the company will have outrun $100 million of market cap, and that it will probably be able to hang around and wait for new catalysts to arrive. In the meantime, the stock will probably follow the market-wide sentiment of the equities traded on the Nasdaq, that the quantity of capital available for risk-taking will decrease significantly over the short to medium term. Bionano Genomics does have a lot of potentials in this new sector, as the need for treatment more focused on individuals is likely to increase over the decades to come. It was also one of the first stocks to take off over the past few years when people assumed that the bull market was never going to end. Of course, this ended up being a big mistake, as the bubble collapsed soon after. Since then, Bionano Genomics was examined under a new pair of lenses, which emphasized on the fundamental weaknesses. The market-wide skepticism and pessimism about risk-taking also didn't really help. There have been 342,000 shares traded, compared to 30-day average volume of 850 million shares. In terms of the medium-term volatility, its share price fluctuated between $2.95 and $30.10 on a year-to-year basis. The traded share volume provides us useful information into market activity. It reveals the quantity of shares exchanged at a specific moment, thereby indicating the adequacy of liquidity to facilitate trading strategies. A low volume float can make the stock price susceptible to manipulation and also suggests that the demand can be low. Comparing prevailing volume to the historical average can also show us potential for trend reversal or breakthrough when a substantial difference exists. For instance, a stock breaking through would very often have much higher current volume compared to its historical average. The market cap of Bionano Genomics is currently at $119 million, compared to an enterprise value of $53 million in its enterprise value. The quick comparison between the market cap and the enterprise value often gives us an idea of whether the stock is trading at a premium or a discount compared to its intrinsic value. It is far from being a perfect measure, but it does offer us an idea of what the current momentum might be. A market cap that is higher than the enterprise value suggests that the stock is trading at a premium, probably because the market believes that the company can deliver in its promises in the future. On the other hand, if the enterprise value is higher than the market cap, then it is a sign that the company may have significant fundamental weaknesses or even solvency issues. When we look at the options market, the ratio between put and call options is 8%. 187 contracts have been traded within the most recent day, and over the past 30 days there have been 405 contracts traded. The options contracts can help traders to both hedge their risks and provide an additional revenue stream by selling them to others. The put options allows shares to be sold at a strike price, and the call options allow purchases at the strike price. They can be traded until the expiration date, and can tell us what the market sentiment is towards a company, although they might sometimes be wrong. When we look at the ownership structure of the company, 152% of its outstanding shares are owned by the institutional shareholders, some of the biggest institutional owners being Vanguard, BlackRock, and Millennium. Typically, we would prefer to see institutional involvement if we decided to hold a stock for the long haul. This adds a level of stability and reassurance in the medium to long term. It indicates that the market believes the stock will provide value over an extended period, a crucial aspect for investors to weigh. In my view, a reasonable benchmark for institutional ownership would be in the range of 25% to 30%. However, it's worth noting that there are exceptions to this guideline, as some outstanding companies are predominantly owned by individual retail traders. Additionally, not all stocks are purposed for long-term investing either, making some equities worthwhile to be bought even if they have weak fundamentals and low institutional participation. Lastly, let's take a look at the short interest of Bionano Genomics. According to Fintel, the short positions take around 14% of the total floats, and 62% of the short transactions are made in the dark pools. Short interest is important in stock markets. It measures how many shares of a company are borrowed and sold by investors who bet the stock price will fall. When enough people do this collectively, the measure becomes a hot topic. Short squeezes happen when the stock price rises unexpectedly. Those who borrowed shares must buy them back at higher prices, causing more buying, raising the price even more. The theory is that this would force short sellers' hands and bring large profits to the long positions. Short squeezes aren't common. They need high short interest, which isn't always present. Market conditions, company news, or social media can trigger them. Some stocks also have protective mechanisms, like circuit breakers. Timing short squeezes is hard. Investors may lose a lot if they put their money on the wrong stock or at the wrong time. Risk and uncertainty are always there. Short interest shows the number of positions people believe that the stock will tank. Short squeezes do occur but aren't usual. They have been the exceptions to the rule, and not the other way around. Predicting them can be tricky, as retail traders are often too optimistic in calling them. My recommendation is to keep the existing position, and to wait a bit before buying more shares. We may be entering into a phase of sell-off, so it's better to wait before engaging with more capital.